you
Yeah,
wanna-
we'll say food talk for maybe we'll
I'm getting
rebrand
ready to
Monday
eat.
to be food
So,
talk.
we like to talk about like DeFi and crypto side of the of this crypto NFT space. And I've been wanting to talk about stake DAO for a long time, but if there's anything like people want to hear about in the DeFi greater space in the comments, definitely like interrupt and we can pivot.
I like updating people on what we've been talking about. Like, I just sold 100% of my Viper position, and like in the last couple of weeks, we told a bunch of people to buy Viper. So I feel like keeping people updated if they don't follow it as closely as us, like knowing when that emission schedule changes.
Weren't we talking about kind of just doing some basic, just kind of Bitcoin chart reading, maybe once a week, just kind of like some general takeaways
just
from
technical analysis updates,
total market tech? Yeah,
All right, let's start with that, and then move across the.
I wouldn't mind doing some stake now too, but maybe to show the emission schedule for Viperswap, because it is about to be way less. And like, the thing you need to know about it being way less is not only will that make your rates less, that makes people less inclined to put their money into it. So if they pull their money out of the higher rate pairs, which are the Viper pairs, that's liquidity leaving Viper, and that means the value of the Viper that you have in your pair might be going down drastically. So that's why I sold. But, not financial advice. Do whatever you want to do with your money. But, the super high rates are about to end. So what that will do to people holding the token is unknown
that's
to
why
me.
we kind of wanted to get in early.
Okay, let's start with that. So we've been talking about Viperswap and liquidity mining on Viperswap for a while. So Viperswap is a swap like DEX protocol that runs on the Harmony mainnet. It's a fork of like SushiSwap, which is a fork of Uniswap. And it also has elements of BAO finance in it, in its locking and unlocking mechanisms as far as providing liquidity and staking that liquidity has scheduled unlock periods. So if you go to viperswap.1, you can see it's a swap like you're already used to seeing on Uniswap or any of the other like swap protocols, because it is a fork of all those things. But you can come up here to the right, click these three dots, and click the docs button. I'll just do it. It brings up basically the white paper plus the documentation on Viperswap and the Venom DAO, which is the DAO that makes this product. They also make WAGMI and Cobra Swap on Binance Smart Chain. But the Viper token is like the governance token for this Venom DAO. Either way, we've been talking about participating in liquidity farming on Viperswap, which is if you click on the stake button here and go to pools, you can see the Viperswap protocol incentivizes participation in supplying liquidity to these different token pairs.
Yeah, I'm fucking 1,500% still on that one.
Oh yeah, it's going to be high for weeks. It's going to be 8x for the next like 2 months. So let's see what we're talking about here a little bit step by step. So these pairs, you can choose basically cryptocurrency assets like any BTC is just Bitcoin that's been bridged through the any bridge protocol, which is another open source protocol you can look into and see if you would want to hold any BTC. Otherwise, there's also, I think, one BTC, which is wrapped Bitcoin on Ethereum, which is then bridged to the Harmony blockchain. Here it is, one WBTC. So there's a bunch of different assets here. You can choose a pair that you like, and then you can earn an additional APR percent that's paid out in Viper tokens. That's basically the distribution model of how Viper token is being distributed. And if you read through their documentation, there's 500 million total, just like SushiSwap's tokenomics. And you can click here, Viper tokenomics. And then the Viper emission schedule is what we're paying attention to. So when Viper token launched, they started emitting at a 250 times the base rate emission.
What do you think the APR were that was happening?
Probably like 5,000-6,000. Well, probably more than that. Probably like 10,000.
Yeah, 10, 20,000.
The token was also worth way less then, though. So even though you're making way more of it, it's not as crazy as your return when the vault.
Like 4 cents at this point.
Yeah, assume people held the hold way up to $1. I mean, I'm sure they sold along the way.
Yeah, so it was launched, and with a lot of these types of protocols across the entire cryptocurrency space, most emission schedules look like this, where they start very aggressive to incentivize an initial funding of liquidity and participation from a community of mostly savvy whales, honestly, at these prices. And then they're basically buying essentially liquidity from those whales in exchange for the protocol token, plus all this information on what they're going to do to build this protocol's value over time. anyway, the unique thing about Viperswap that we're really interested in is that unlike a lot of protocols where the emission starts super high and then trickles off in once more I guess day-to-day users of cryptocurrencies come across this type of opportunity, the opportunity has already passed, and these rates don't come back. But this schedule cycles up and down, so you can see it jump back up to 128x for a while here, and lately we've been experiencing 32x multiplier, and right now it's just dropped just today down to 16x, and that 16x is what's generating these percentages here, these APRs. So you can understand that those APRs are about to get cut in half again next week, and then stay at that new level for a full month, because there's 4 of these at 8, and after a month they'll get cut in half again, and then they'll stay at that new level for this 2.5 months basically before being cut in half again. So this emission schedule is really winding down here on the end of the distribution model of these 500 million tokens, because at this point 400 million already exist. So here on the right you can see what the total balance is. So right now we're at 382 million of the 500 million tokens have been minted
the other
already.
thing is, like, when it goes down to 8x, that is now a worse proposition than DeFi kingdoms on the same network doing the exact same thing. There's another exchange that'll offer you more. So like, even though it's going down to 8x, like, I assume a lot of people are going to exit their positions and bring them to a more lucrative position. Like Jewel is going fucking wild right now. So like, I anticipate, even though it goes down from 16 to 8, like, the reason I sold is because I assume people will try to find better DeFi positions. And there's literally opportunities on the same exact network. You don't even have to move your money around that much.
Yeah, and the fees aren't very prohibitive. So like, you can bounce back and forth on what's most advantageous with pretty large positions if you wanted to, as opposed to Ethereum, where it is more advantageous to just set it and forget it.
I actually would have thrown my money into DeFi kingdoms, but like, I'm afraid Bitcoin's going down, so I'd rather just hold it in stable and then buy back later if everything's going to drop. But let me see. Yeah,
Bitcoin dominance is loosening in general. In my opinion. There's a trend that I feel like Bitcoin is losing less of, or its dominance isn't as intense as it used to be. But I mean, I think it's fair to say that Bitcoin still does kind of dominate the total market, that you can more or less assume when Bitcoin's down, the total market goes down. But
so here's another way you can earn some serious yield on just a stablecoin position if you're trying to protect yourself from a potential downturn in these crypto markets. So what I did now is from Viperswap, I just clicked this charts button, and then I waited a little while, and it loaded up all the current basically statistics of all the assets trading on this protocol. So I can see here are the different liquidity pools and what those pools are earning in basically annualized APR over the last 24 hours. So whatever the last 24 hours performance of the pool was, if we annualize and project that performance would be constant for the full year, that's what this percentage means. So you can see if I click on this percentage, it'll organize the pairs by most liquidity, and you can see that the pool right now, USDT, USDC, is making a huge APY in the last 24 hours. So you're earning this percentage yield in these tokens. So if, like Lewis said, he's rather going to sit in stable coins, what I would suggest he do is take those stable coins, split between USDT and USDC, and contribute that liquidity to this liquidity pool. You won't be able to stake this pool because it's not one of the incentivized pools, so you won't be earning any new Viper token on it. So if I go here, you won't find a pool of USDT, USDC. But because there isn't direct incentives for that, the pool liquidity is significantly lower. So there's only $12,000 in this pool, but over the last 24 hours, $33,000 traded against this 12,000, generating fees of $99 for the people in this pool.
And you could own most of that pool with a pretty short.
I mean, you could put 10 grand into this, and you'd have half of the
50%.
And it's all stable coins. Yeah.
I like Tranquil though. That's where I park most of my stable coins.
So
I also locked up. I did the 6-month lock on Tranquil too. I'm excited to be participating in that.
yeah, so I'll show that in a second too. But anyway, that's the concept here, and that's what we were participating in, and that's also why now that we've come over this hump on emissions and we're coming back down into the lower rates again, that's why Lewis is saying be aware that this is happening, and if you want to mitigate your risk now and
Literally
kinda,
starting on 110.
level off your
Also, if you just move into DeFi Kingdom, it's 12x, so it's like a bigger rate on a different platform on the same blockchain. So like, I was going to move all my stuff into DeFi Kingdom, but then I decided like, if Bitcoin takes a big fat shit, I can just buy all of that stuff back for cheaper and have a larger position. So like, I'm just waiting in stablecoins until we figure out what the crypto market's doing.
Personally, I'm split between both of these protocols. I contribute liquidity to both DeFi Kingdoms and Viperswap, and I've also reduced my exposure to Viper token within my own liquidity positions. So on Viperswap, instead of farming pools that I used to farm, like I used to farm MAI and Viper, I removed this pool and I sold the Viper token into Harmony 1 or into a different asset that isn't Viper token. And then I paired that one with another asset. So I think I did it with one and USDC. So I switched over and I started supplying liquidity to this pool. And instead of earning the 1,000, it's still 170, 180. And then I also do the same pair.
Well, how easy is it to get jaded? I'm like, only 200% pass.
Yeah, 180% APR. You got to consider also APR is not APY. 180% APR is more than 1,000% APY. So keep track of all that stuff, and keep in mind that these APRs are based on a token distribution that is 95% locked. So you're only actually accessibly immediately getting 5% of this APR. But yeah, we talked about all that stuff, and that's kind of like catching us up on what's happening with Viperswap, I think. So the other thing that Lewis was saying is this Tranquil Protocol. I'm going to go to Tranquil.finance.
Lance says you're only getting 5% of the APR since it's locked.
Exactly. Yeah, that's what I was just trying to emphasize too.
I'm pretty happy. Like, I got 10K Viper staked, and I'm like, that's enough fucking Viper for me. So I sold my Viper position yesterday.
Yeah, particularly since it's locked until I think like mid-February. You know, you can't touch it, but you're still holding Viper tokens. So if you're thinking about exposure to the upside of Viper, you may not be actively getting unlocked rewards.
If it goes up to $2, that's $20,000. And if it goes down, then I feel good for leaving.
So having that locked balance is nice in that way, that you can, same thing with DeFi Kingdoms, you have locked balances that keep you exposed to that token, while with your active tokens be able to move them in other positions.
I learned from Aether, you got to be honest about liquidity pool positions. I was like, yeah, I'm fine getting more Aether, and I paired Wax and Aether, and then I ended up with a shit ton of Aether, and I was like, actually, I don't want this much Aether. That's how Viper is for me. What the fuck am I gonna do with my Viper if it loses value? Like, if I get stuck with a giant bag of Viper and it's worth nothing, I'm gonna be pissed off. I don't want Viper. Like, Viper has no use for me. Jewel can buy me fucking heroes, and I like playing DeFi Kingdom, and I do that every single day. So if like, that's why I moved from Viper over to DeFi Kingdom, because like, I put it into US dollar, BUSD Jewel, but even if fucking Jewel takes a fat shit with the crypto market, I'm just buying more Jewel with my BUSD, and then I can buy heroes and play the game, which is what I want to do. But the opposite is not true. If that happens to me on Viperswap, I get stuck with a big bag of Viper, I have no fucking use case for Viper. And like, I'm just gonna be upset because the only reason I was doing that was to make money. So like, when I see that the money could leave, I'm fucking out of that position because I was only in it for the money. Whereas DeFi Kingdom, I actually believe in the protocol and like the game and stuff. So I'm fine being in that position with more risk.
I think that honest conversation managing risk of like, do you really want to have both sides of this pair, and being really deliberate.
I want it to worth the dollar, but if it wasn't worth the dollar, I don't want Viper.
Yeah. So I think it's a hard thing to say in your mind. You're like, yeah, sure, I could have both. Aether's a great example. But you know, if you're going to go in these positions, particularly with the amount of money that some people do, you know, you really need to take a hard look on what tokens you really want to hold. If the pair were to shift, if there's a lot of swaps that push you more towards the one side or more towards the Jewel side, or whatever the two pairs are.
Yeah.
Yeah, Lance is saying Viper gets you 1/3 of the DEX fee, so it has utility. But it just depends on like is that a utility that I care about, and I don't really care that much about that utility.
Yeah. Although and another utility that they had recently announced that when Viper, when the unlock period starts, when they hit the block that's slated to happen in like mid-February, they're trying to implement a borrowing protocol similar to Tranquil, where you can use Viper, collateralize it, and then borrow against it. So for people who are interested in that, that also is an additional use case for Viper upcoming. So it wouldn't, and I think they're doing that at the same time to not encourage a mass sell-off.
You know me, I don't do the borrowing on Tranquil. I don't like having debt. So like,
yeah,
again,
I agree.
The use case for me is not there like that. I'm not saying everybody should sell Viper. That's why we don't get financial advice. If you want to do any of that stuff in the future, you should hold your Viper. But I don't.
Yeah,
I want to play
personally like
so I
those
move over there.
protocols, so I probably would like to collateralize my Viper. But I do think it's good in general, because having that utility to collateralize it and borrow against it will hopefully create less sell pressure for a mass sell-off once people start locking it.
I think realistically for us in 6 months, Max is going to have found another DeFi position, and he's going to want us to move all of our money over there. So, like, I don't know. The chance of us actually going back into DeFi kingdoms fully when new opportunities exist with the way higher rates, it's like, I feel like I'm not going to be going back into Viper. I'm going to be going into other protocols. That's why I'm not, like, staying long-term invested in Viper or caring about that.
And I think these sort of protocols and these sort of approaches are still relatively new. I mean, DeFi really isn't that old in the grand scheme of crypto in general as well. So adding on to that, I mean, this is kind of still on the forefront of things. Decentralized exchanges, incentivized liquidity pooling, lending protocols. These are all pretty fresh stuff. So being able to, if you're risk tolerant, jumping to the next thing, either on a new chain or new DeFi protocols, is kind of like a fun thing to kind of chase these initial incentives.
Yeah. So for some people who aren't as familiar with these protocols, like what everyone's talking about a second ago, here, this is Viperswap again. Like I said, it's a fork of SushiSwap. And here I'm on SushiSwap. And you can see I can also like go to farm, stake my liquidity positions, earn APY, just like I can on Viper. It's just significantly lower. But the yield is paid, instead of in Viper token, you're getting paid in Sushi coin and in DAI, or in one token, which is the Harmony mainnet token. But check this out. When you change your wallet from Harmony mainnet back to Ethereum mainnet, and you take a look at what SushiSwap has to offer, the basically the options are extended significantly. So this lend and this borrow protocol are what Harmony's Viperswap are adding, where you can basically be lending your not necessarily your, or even borrow. Let's see. Isn't that gonna show me anything because I don't have, but either way, you can, like, all the stuff that you can do on these platforms on like the Ethereum mainnet as well. And this, like I said, is a fork of that on Viper, and these features are just going to be added to add additional utility to these Viper tokens. So it's not all but I mean, it's all DeFi, so go where the liquidity is best, where the yield is best.
And that SushiSwap, like, neon looking sign is pretty dope. The X Sushi,
I know, right? That's super dope. This is X Sushi, is the same thing as Viper. You can stake it, you earn a chunk of it. So here it's APR is 10% annually. It's pretty solid for Sushi.
Is that X Tranquil stuff we would have had to have gotten a long time ago?
No, you can still do that before the snapshot happens. So that's the next thing I was going to talk about. Is so Tranquil Protocol was something that Lewis mentioned about if you have stable coins and you're just not trying to expose yourself to market risk. This protocol is basically just a normal, like, kind of very vanilla money market protocol, where you have people supplying money in the form of these crypto token assets.
I learned last night that fucking USDT has so much less liquidity on this network. Like, I was going to go to USDT instead of USDC because the yield was slightly higher, but the slippage I would have gotten was so much fucking higher that it would not have made me any money. It would have lost me way more money moving into USDT.
What you got to do is you take the USDT and then you take that shit over here. Check it out. Here's where the liquidity is. On Harmony, you go to Curve. .finance or .fi.
I put it in USDC because I'm fucking lazy and didn't want to deal with all that stuff.
Yeah, but just so everyone knows, if you ever do have a USDT on this network, you go to Curve, Wants me to switch networks because I didn't go to the Harmony side of it. But then I can go here to networks, Harmony, and then here we'll see there is a, let's see this pool. There's a $17 million liquidity pool with $6 million worth of USDT in here. So you'll be able to swap your USDT into USDC, for example, to do the rest of your trade. And you can do that with, like, let's see, if you do $1,000, you're getting $9.99.25. $10,000, you're
pretty solid.
It's really, really good.
I think I ended up spending like $5 on DeFi Kingdoms. I moved into one, and then I moved from one into the other one.
Yeah, you can definitely get really good deals on Curve. So Curve Protocol is the stablecoin liquidity protocol across a lot of different blockchains. This is also going to be the best deal. This will be the best deal on Ethereum mainnet too. Yeah, that's basically where all like stablecoin liquidity lives these days. But anyway, so let's go back to this money market.
1 sec, we're running traders.
Okay, cool.
It's actually a really close battle.
Switch over and see it.
Actually, we're gonna win, I think. Let's fucking go! That's a boss battle. We'll see if we can win that.
I hear that DeFi Kingdoms music.
Is that me?
Gotta be. I don't have it open.
My page was muted. That was weird. The music was still
I can definitely hear it. That's fun. Nice win. All right.
We'll do our boss battle and then get back into Max's thing. But this is a full skull battle, question mark. We need all the guns if anybody wants to hop into Stream Raiders. It's go time, baby. Let's do top left as our home base for this battle. And then I will show Max's screen again.
Yeah.
There we go. Back to Tech Talk.
Excellent. So we were going to transition here into a regular money market from what we've been looking at, and what we've been looking at is what's called like swap protocols. They're automated market maker protocols, because it's basically a money market that's being regulated or maintained by an algorithm that balances the value of all the assets between all the different pools by trading between them all. This is a much more simple to understand money market, way more vanilla kind of traditional money market style here. And this is also, I want to say, all these things that we're looking at on Harmony exist on pretty much every blockchain. This, for example, is a fork of the Compound protocol on Ethereum mainnet, and then they also just had a fork launch on Kronos network, which will look extremely familiar too.
I still need to figure out what there is like that on BSC, like Binance Smart Chain. There's got to be something. But I do have a bunch of stablecoins sitting over there doing nothing. So if I could just stake it and get some APY on that, that'd be great.
Yeah, exactly. So this is the way that these money markets work. Let me explain this really quickly because it's really quite simple. Users can come and take a position of their crypto and just supply it to this money market. And you can see people have done that to the tune of like $14 million worth of one, 16 million worth of ST1, 11 million worth of Bitcoin wrapped. There's 16 million bucks worth of Ethereum, 11 million in US dollar coin, and 5 million in Tether. So all of these assets get supplied into the smart contract, which then lets the supplier of the asset access the borrow market. So what that means is if I supply, for example, I have checked right now USDC. If I supply USDC, let's say $1,000 to this market, or even 100 or 10, whatever amount you want, let's say $100 to this market, that would then give me access. If I click on this, it tells me if I use as collateral, it has a collateral weight of 80%. So $100 supplied would give me $80 worth of borrow power, basically. So what that means is then if I have $100 supplied to this market, I can click over here and borrow any other asset. It doesn't have to be the asset I supplied. So even though I supplied $100 of USDC, I can come here and borrow Bitcoins. And then just, I need to obviously sign these transactions and stuff. But yeah, that's the concept here. So for borrowing the Bitcoin, I will then owe an interest that I have to pay back to this protocol in exchange. So right here, when I mouse over this, the interest, it says market rate, negative 7.4%. So the interest I owe for taking the loan in Bitcoin will be 7.4% of the Bitcoin balance owed in Bitcoin and charged every block, annualized to an APY of 7.4%. Meaning that if I borrow $100 worth of Bitcoin and I leave that position open, then every block that passes, which on Harmony can be 2 seconds to 3 seconds or so, the protocol will charge me interest at an APY rate of 7.4% paid in Bitcoin to this balance. So basically, I owe the money in Bitcoin plus like 7.4% over the year. As long as I maintain collateral to keep my, if we go to dashboard, I'll have a borrow limit once I add to the deposit. As long as my borrow limit doesn't hit 100%, I can keep these loans open indefinitely as long as I keep my collateral side happy. You can pay the loan off at any time as well. And just by, clicking on here and supplying, like repaying your loan and paying it all the way off. And that would close the loan and you'd stop paying interest at that point. So you can basically leverage positions into other borrowed positions as often as and as quickly as you'd like and as long as you'd like, with a very transparent kind of like structure of how those fees will be paid. And then what we're looking at here is why these numbers are positive is because for that Bitcoin loan, I owe the 7.4% in Bitcoin, but the protocol itself is incentivizing me to participate in taking this loan to the tune of 9.27%, which leaves me with a net APY of actually positive. So for taking this loan in Bitcoin, I will start, if you go back to the dashboard, once you have the loan open, you have a rewards balance here that starts to fill up for loans that you've taken. So you'll start earning this Tranquil Protocol token, 9% or whatever more than the amount you have.
Yeah, so the interest is paid in the token that you borrowed, but the reward is paid in Tranquil.
That's right. So if you wanted to actually realize this rate as positive, you'd have to claim this Tranquil pretty actively, maybe like once a month, once a week or so, sell it, and then use that, sell it into Bitcoin and use that to pay off your
because you need to pay off the loan in the token that you borrowed as well. So
yeah,
it is useful to borrow in stable coins and then swap that into what you're trying to play the market with, and then swap back and pay it off in stable coins. But
so that is effectively, this gives you the building blocks to create strategies beyond like what you can do with your own money. By that I mean, like Mark was saying, if you were to borrow, like if you deposit your dollars in here and then borrow just your dollars back, use those dollars to buy Ethereum, that is effectively creating a leveraged long position on Ethereum because you still have your dollars. The dollars are earning interest, and on this side of the market, whatever you deposit is earning interest, and the market rate is the interest that you're earning in the base asset, and the reward rate is the interest that you're earning in Tranquil token reward. So this Bitcoin that you deposit is now earning 2.58% in Bitcoin, and an additional 4.3% of the value of the Bitcoin today in the value of Tranquil token today, meaning these percentages need to be realized into these assets if you want them to reflect that percentage for the asset.
I've been just staking. I staked all my Tranquil into the
and that's exactly what I do with it too. So Tranquil has its own use case where Tranquil is the protocol token for this swap this money market protocol. It basically gives you the ability to take a cut of ownership of this money market. So the money market generates money by people supplying assets and then people borrowing assets and paying interest. So you can see if you deposit your Bitcoin, you're earning 2.5% on the Bitcoin, but whoever borrowed the Bitcoin is paying 7.4% of that Bitcoin. So part of that has to do with there's a 40% of the available Bitcoin is only being borrowed, meaning that this 7% is, slightly enough to cover that would be slightly enough to cover like 4 or so % of a market rate here. But that additional rate that isn't being paid as incentive to the supply market is being paid to the protocol itself. So if you come up here to this Tranquil tab,
Damn, the rate for borrowing one is super low.
Oh, so the arbitrage of those individual borrow markets is what funnels into that 6-month lock staking protocol.
APY is what you pay on the borrow market, right?
so you can actually, the APY at the borrow market, this APY is a net amount based on what you pay minus what you're getting paid in Tranquil.
Yeah, the reward is 100% Tranquil, whereas for the supply side, it's both.
Yeah. So you need to mouse over the actual number. So if you're borrowing one, you're actually paying 7.23% in one, and then you're earning 7.46%.
Oh, okay, I get it. So it's just the
So
one
you are
side
still
minus the other
you're
side.
still owing that money. Like your debt goes up every couple of seconds in one. So if you're borrowing a couple thousand, that's fine. But again, if you borrow $1,000 worth of one, 7% is still $70 over a full year.
But yeah,
So
the
you're not,
difference. Oh, sorry.
you're not gonna end up getting wrecked very quickly with these APY rates, because this is APY. 7% APY isn't. It's not gonna suddenly compound into some absurd amount of money, but you do need to understand how to maintain your debts and stay on top of your collateral so that you don't get liquidated. And getting liquidated is when on your debt, basically it's when that 80% that you have covered that you're taking a loan against, if you go beyond that 80%, the protocol basically, it's called a margin call. It margin calls you, and it essentially will liquidate what you have supplied as collateral to cover what your current outstanding debt is, and charge a fee of, I think it's 8% or something on top of that. So that would be like getting margin called. You won't lose everything, but you'll lose 88% or something of what you have supplied against what you have borrowed when you get margin called. And it basically will close all your loans that are all your loans, because all your loans together add up what you're borrowing. So if you're borrowing Bitcoin, Ethereum, and US dollar coin all at the same time, that will all basically factor into this number will change and show you what you need to maintain. And if then, let's say Bitcoin, you're borrowing Bitcoin and Bitcoin shoots up in price all of a sudden, but you don't have collateral on the other side that is also Bitcoin, so the collateral doesn't shoot up in price, your interest or your commitment rate to paying off the loan can put you into margin call territory, and you can get wrecked that way. So keep in mind how to balance these loans. But now that you understand where the market makes its money from, you can get a cut of that money by taking the Tranquil tokens that you're earning, or you can buy the Tranquil tokens on SushiSwap directly if you want. But you can take those, and here it says lock Tranquil staking, you would earn 75% of what the protocol makes gets paid out to this, which it says right up here. And you can read further in the documents on how all these fees are generated.
That's the difference. So if the interest, like for example, here you don't have to mouse back, but the say for if you're borrowing wrapped Bitcoin, the 7 point, or here, actually, let me do one. If you're borrowing one, the interest that you're paying is 7.23%. Yeah. And on the supply side, the APY that's being paid to people supplying liquidity is 5.87%. So the difference between that 7.23% and the 5.87% in those fees is being redirected into this locked 6-month lock staking protocol. So 75% of that difference then gets paid into this lock staking protocol. So then you basically are passively getting a cut of these borrow markets and the interest that's being charged, which is really interesting to me.
Yeah.
So you don't have to participate in the borrowing, but you could basically make returns on locking Tranquil to support the borrow market itself, which can be like a safe way to do it.
You just said, let's emphasize that you don't have to participate in these borrow markets to capitalize on the supply market. You can come here and only deposit USDC and never collateralize it and never take a loan against it, and make 11.55% on your deposit passively for the year. That 11.55% will be paid to you 7.42% in USDC directly, and 4.13% paid in rewards.
That's what I'm doing. I haven't even signed. You have to sign a transaction to enable the borrow market, and I haven't even done that on my account. Like if I click on the other side, I can't even click the collateral on mine. It just says you have to sign transaction, so I can't even do the other side of the thing. But I'm fine just parking my USDC and then getting rewards. It's like a high yield fucking bank account. You're putting dollars in there and getting fucking 11% back.
Yeah,
Show
and
me
the
what bank will give you that.
the 6 month lock staking piece, if Max goes to that TRANQ tab, is also another way for you to conservatively make rewards or build rewards and passive income from supporting a protocol that you don't necessarily need to participate in. And these fees or these rewards are fees paid in all of those stable coins. So you're not being paid additional Tranquil.
Massive value proposition, in my opinion, for Tranquil token. The fact that I can take the Tranquil token that you're not even having to buy, but just getting passively for contributing, you know, a single coin asset to a stake position. Very low risk. You can withdraw anytime, no fees, no like lock periods.
And that's what I do. So like if we see the trend flip into a bull market again, I can throw all this money right back to DeFi Kingdom or Viperswap. But until we see that, I'm like more comfortable just holding the US dollar value because I could get a deal on buying the crypto back.
Yeah, very decent value proposition. Then for that passive gain, you're earning these Tranquil tokens. If you take them and you lock them here, so you add them from your wallet, locked and stake, they'll be locked for 6 months and you won't be able to unlock them unless you flip this early button. And then when you unlock them that way, 50% of the balance gets burned on the way out.
I do like that it gets permanently removed from circulation. Which is,
not just from you, it gets burned from circulation entirely.
Yeah.
And then this is the part where Mark was saying this is such a big deal, in my opinion, where this protocol token, instead of trying to like redistribute the money it makes into its own token value, it just gives you all the tokens directly. So when you click claim on this, you end up getting Tranquil token, Harmony 1 token, Bitcoin, Wrap Bitcoin, Wrap Ethereum, USDC, and USDT based on each of those individual assets' performance in the money market the previous month.
That's pretty sick.
So
yeah, so it depends on where the borrowers are going. So if there's more borrowers in USDC, then there'll be more rewards in USDC.
You can see that most of the rewards are in USDC and USDT because the borrowing markets are the highest there. So a lot of the money that
paid in dollars, never can complain getting paid in dollars.
Or
the other side of this is they just added this ST1 asset. This is a basically an index asset that lets a user who stakes one, because one can be staked for about a 10% annually, around 10%, maybe like 9 to 10% annually if you stake your one, but then it has a 30-day lockup period and you can't use staked locked one in these DeFi protocols. So this is an index that lets people, if you come up here to ST1, you can stake your one with any of their validators here and then get this index token, which you can then use to collateralize and participate.
Double stake, baby. Like a double step for you.
Man.
So this ST1 is earning about 10% in one token, but it literally is just it's just one that's been staked. And you can come up here and take your ST1 and unstake it and then get 1.00411 per each ST1. And the unstake period here is 7 days instead of the 30 days that it takes to unstake regular one token. Plus you can be using the staked one token as ST1 in all these DeFi protocols while they're staked and earning you this interest, because this number is going to keep climbing as the validators continue to like generate their 9% passive for you. So this is a really cool thing. The Tranquil team is behind this index token, also launched it very recently. It's really fucking cool. And yeah, and because that was added, so you can see that got added to the money market last month, but you see it's still not part of these rewards because these rewards are lagging by a full month. So next month you'll also be getting ST1 every time you claim this. And they're also currently working on adding DAI and UST stablecoin to these money markets, which you will also be earning in these fees. Anything that gets added to the protocol, you start earning as your portion of that by being a staker in this lock staking thing. So it's a very, I would say, very like modest risk strategy compared to some of the other stuff we've been talking about with liquidity mining and trying to jump from pool to pool and all that.
Yeah, I totally dig that as like kind of a less risky position, but basic capitalizing on other people's risk taking in a growing market and a growing protocol that's relatively new in general. With
I'm gonna do some technical analysis.
And
show
then
some charts.
yeah, let's do the one last thing here is there's an airdrop coming for people who currently do stake this. So if you still have time, basically right now, as far as I can tell, it hasn't happened yet, to stake any Tranquil token to this locked protocol, and in exchange, you should be getting airdropped on their Cos or Chronos chain. They're doing a fork of this protocol.
Heard of Chronos?
Yeah, this is the crypto.com.
Is that the thing you're playing with those weird one of one or the avatars?
Yeah,
on?
That's where the meerkats are. Yeah.
Yeah, the meerkats are on Chronos. Those are over here.
Now
too.
it makes sense how you found this because it's related to an airdrop you're getting on something.
This is how the airdrop showed me where this is where the Bootstrap, or what was it called, the Launchpad event was happening on this DeFi platform, and this platform uses those meerkat images. And I was like, fuck it, I want some meerkat. Yeah, mad meerkats, dude. I thought that was hilarious.
Yeah, I mean,
So
I've searched around.
Those.
I checked around like
here's my
box and other.
Here's
like,
the fun. It was like, if you have these meerkats, you can add them here. So I was like, fuck it, like I want them, and I added them, and I get 2% extra on a 660% APR rate, which gets boosted by 2%. This is actually pretty significant. If I get a third one, that's 3%. But I'm keeping an eye out for them.
How much does meerkats cost? Just interested.
Too much. Yeah, it was like, let's see, they are.
It was like 400 Crow, right? How much is Crow per token?
Like 50 cents.
So it's like 200 bucks.
Yeah, like $200, I think.
Not cheap, but I mean, in the even Ether projects, you can pretty easily spend $200 with no utility on a profile picture project. So the fact that it actually
pretty par for the course
is your yield in a DeFi platform, I feel like it's.
That's true. Yeah, they do give you a yield that's more than most of these things do. But yeah, they're like around 250 or something for like a nice one.
So yeah, if something like this ends up on EOS or Wax, I would fucking love that. But there's
I would go so hard on anything like
items
or like this on Wax.
I checked out DeFi Box a little bit, and that's like a swap DeFi protocol, but just doesn't quite have the incentivization factors to it from what I've looked at. I mean, I didn't dive too
on
deep into
EOS.
It's on EOS, correct? DeFi Box.
Yeah, they're like $435. I think I paid like $500 for one of mine, like the Tiger one I have.
So like, just this sort of ecosystem, and EOS is a lot different. Obviously, one is a fork of Ethereum, so there's already a lot of existing source code for these things. But hopefully EOS catches up to these sort of incentivized protocols, or maybe we just aren't aware of them. And if you are, then please let us know. But
yeah, I think I got my Tiger for like 450 or something. So the Tiger floor is now like way higher than that.
There's Vigor too. I think Vigor is another popular one. I haven't quite looked into that too aggressively, but
yeah, I mean, there's a lot of stuff like happening on all these different chains. So here, this is like literally the same money market protocol, and for having those X Tranquil staked right now, you're going to get more of those Tranquil or that protocol token dropped here, which you will then be able to just stake here for a cut of all these assets, and you can passively be earning on both money markets. So I'm interested in that kind of stuff. And then I guess let's transition here to looking at just
Vigor has like a lending protocol, so that's interesting, but I don't know.
On one of the R Planet streams, Bonds helped develop a lending platform on EOS. I forget what it's called. Maybe that's it.
Yeah. All right. Let's. I think we covered a lot of fucking DeFi stuff, so let's just end off on looking at the prices of Bitcoin at the moment.
I feel like everybody likes to do a little bit of technical analysis. Can I access that MetaMask, or do I have to use Crypto.com app?
So I'm using, to access this thing, I'm using MetaMask. So you can see it's just the in MetaMask.
So you're not using a third-party installed app?
No, I'm using MetaMask on the Chronos network.
Copy that. That's what Tune wanted to know.
Yeah, and you can do that with this mm.finance is where the mad meerkats.finance, basically mm.finance. That's also accessible through your MetaMask wallet.
Crypto's getting just fucking weirder and weirder. We got fucking Viper and we got meerkats.
Well, and all the layering of stuff that you can enter into an LP position, stake those resulting LP tokens, and then get a third token, or and then take that token and stake it in a different thing, and then get an additional token. It's just kind of, you can go down the rabbit hole so easily.
Yeah, I'm definitely interested.
You said this Pro is
2 or 3 times I even bothered.
I mean, you can also do like CRO and USDC here for 66%, and then add like 2% boost on top of that. 68% is not bad.
When Crow tanks, do you get to eat it?
Wait,
my
so
bad
you were
fucking
saying which mainnet is the Crow on?
It's its own mainnet. It's
Oh,
Cairo
okay.
mainnet, CRO.
But it has
So-
MetaMask integration. That's what you're saying. Okay.
You can if you just go to mm.finance and just click like sign in with wallet, it'll ask you to add the mainnet and it'll just add it to your wallet for you.
Well, yeah, we should save Stake.io for next week. I do really like
Yeah.
Stake.io. It is on Ethereum, so it can be pretty pricey and therefore cost prohibitive, but it does have some really,
It's-
really interesting
yeah.
kind of. I think the broader overall takeaway here is that there's a lot of more approachable front ends to be able to do advanced crypto strategies that are very user friendly. That wasn't the case in the not too distant past.
Yeah, I just want to go over the Harmony stuff because I feel like,
Yeah.
I mean, the thing I told Max is like, if we get people to some people invest in these things that don't totally understand them, and if we don't give them updates on what we're doing, like, I mean, I just exited my position in Viper, so it's like, if you're trying to follow our moves, like, might as well share them and like.
That's true. I scaled my Viper position down, although I'm still farming Viper tokens. It's not with Viper coin pairs. So,
And yeah, just also like
go-
that was pretty big news, pretty time sensitive news. That's also why like we've done Viper
Yeah.
the past couple weeks because it's been fucking Snake Week and like the rates went up and like. Yeah,
But it doesn't go on
I don't know.
forever.
Stay
Yeah.
down next week. Yeah, like next week nothing's changing for Viper, so we can cover something else.
Yeah. So I'm looking now just like to end at the like round out the whole like experience here. Let's take a look at the market prices a little bit.
The
So
Max
Ethereum
Talk
looks-
experience.
Yeah. Well, just the like, yeah. So
It's a
it
journey,
looks
not
like Ethereum is
destination.
closing the weekly pretty fucking direly. This is not a good close for Ethereum. Looking the weekly candle closing below the B-bands line could spell Ethereum dumping pretty fucking aggressively still from here. And I think I was seeing similar stuff on Bitcoin. Let's see. Bitcoin and dollars on Coinbase.
Are you
Fucking
picking
actually take a
against-
shit. I mean, I don't love when crypto goes down, but I did just move like very heavily into stables, so I would like for my own ability to buy back cheaper.
And when you're looking at this, are you looking at against US dollar or like USDT?
Yeah, US dollars.
Okay, so straight
Usually US dollars and
not
then
stable.
on like exchanges that are relevant to me. So like Coinbase is what I'm looking at right now.
Okay, gotcha.
Yeah. But you can check on TradingView. It'll chart anything like any. So like if you trade on Poloniex or like I do trade on Gemini too. So let's check US dollars on Gemini. But they're pretty much standard for like Bitcoin on most of these exchanges. But
So
yeah,
it's
Bitcoin
basically
also,
right at the B bands line.
Bitcoin is closing well below the B band's middle, which is here.
Oh, so I was looking at the
still
wrong line.
Plenty
Okay.
of room down to get to this B band line. But then if we zoom further in here on the daily chart, let's see how this picture looks. Also not great. Definitely. So this is like oh, what's the name of this? Hold on. I'll call it by its actual name. Also keeping in mind though that last time when Bitcoin started its bear market and took a hard shit, all the altcoins had about a 2-week bull run while Bitcoin was shitting the bed, and then everything collapsed together.
I mean, I feel like we're sort of seeing that right now. Like, I mean, stuff I'm holding like Jewel and One are going way the fuck up while Bitcoin's going down.
Yeah, way the fuck. That's true. Yeah, we are seeing that kind of stuff.
And it does
That's
seem
what I'm
like,
like-
as opposed
So
to
I'm like, I'm getting the fuck out of Viper while it's
Yeah,
pumping because I don't trust it not to just collapse right after. Like, I don't know. Again,
seems
not
like-
my place. I can't even read charts. I'm going based on what Sid is saying in a fucking chat.
Yeah, in general, it feels like the bear cycles are getting shorter, though. You know, in the past, when Bitcoin would kind of go into a bear market, it would last for like a year or, you know, a handful of months. And now it just over time, as these markets get more solidified, the liquidity is a lot deeper, that it seems like these cycles get shorter over time. But
Yeah, this looks like, okay, here's what it's
Still
called.
be
past
pretty
performance is
volatile,
not
though.
indicative of future performance. You always got to
Like, we
remember
saw
that.
Bitcoin go from like 58,000 to like 40,000 in like a couple of hours last week. Like, this shit can get wildly volatile fast still. In either direction, too, though. the FOMO
But
works in both
this
ways,
Bitcoin
but
price
I'm
looks
getting better at
exactly-
learning to work with the FOMO going down because I have stuff to protect. I have value to protect now because I've made money on this network. So it's like I'm tired of watching all of my value go down when I don't take any, US dollar profits from my.
This is the name of the pattern. It's called the Wyckoff redistribution, and that's kind of what it looks like to me. If we're looking at the Bitcoin price, it looks like that, coming down from a big gain into this, and
Am I not supposed to?
Are you drinking straight from the soda stream bottle?
Yeah, I don't see why not. It's like a water bottle.
I don't know why you shouldn't, but
I don't think that I didn't know that was weird.
So you see where these two lines are?
Put it in the
like
dishwasher.
this area of the chart inside these two lines here, right? If this was like a box, is what the Bitcoin chart looks to me like at the moment. If you're looking at that here, this is that same area in that box. So the way that like a traditional TA person looking at this graph would consider this is a bear flag, an indication that the market's about to do a downturn. The next step is dump.
Also, I'm the only one who uses it too, so it doesn't really matter because it's not like I'm sharing it.
Let's see, and it looks like the next resistance point there would put Bitcoin down. Okay.
40K.
Oh yeah, 39, 40K. Let's do it. So basically this pattern to me looks like this Wyckoff redistribution pattern here, and indicates the market downturn, which I'm expecting to find support at 40K, and then if that support fails, find support around 38K, and after that, oh baby, that would be too low. Have to come around. Let's look at like the high end of these little hills. I don't know, around 36K, it'd be the absolute bottom, I would say, for this fucking like potentially dump incoming based on this bear flag, sorry, on the daily charts. A bear flag on the daily charts, while the weekly candles are closing below the B-band lines. It looks kind of shitty. It looks kind of dumpy to me. And then, yeah.
Is that an official term?
Looks kind of dumpy, yeah.
In my expert opinion, this looks pretty dumpy.
Oh no! There's a soundbite for that.
dumpy.
I don't have up. Are you ready for this,
I don't
guys?
think it's. I mean, again, you can see the volume, the on-balance volume on the weekly here is still not making lower lows. This is
big, massive dumps.
This is very bullish still, though. Look at this. We're seeing the RSI way oversold.
Massive dumps.
Way oversold here. Barely fucking dumping, right? Then we dumped a bit, finally. Strength index is coming down a bit, finally back in like a safe area. Volume, barely leaving these assets. Now we're like not quite back to these 69K highs, although I guess we will get close again. Volume, pretty much right back, even making higher highs if you're maybe is this a higher high? No, but at least picking like it's looking to push it. And then now that we're closing these below, but we're still seeing no new lower lows on the on balance volume. This conflicts with the doom and gloom of the chart of the other indications.
Does that just imply that it'll be like a short bear cycle?
I'm gonna really quickly run stream readers.
Yeah, or potentially just not be able to break through those first resistance levels.
Oh, like it would just bounce off that resistance and not dump as aggressively as the charts would indicate.
Yeah, basically, like I would say, like $39,000, $40,000 for Bitcoin. I'm gonna start buying pretty hard again. Like if this doesn't start to drop off and make new lower lows, that might not. You might not get a much lower low than 40K. if this starts dumping the volume starts leaving the assets, like if this starts making lower lows while the price is starting to fall and the RSI is getting oversold, then
so like if the RSI is low and the volume,
less people are buying and selling it and the value is going down, that's an indication of a dump. But if more people are buying and selling it, but the value is going down, that's an indication that it won't drop as hard.
Yeah. So this metric basically shows how much like value is in the asset as in general. So it's like money moving into Bitcoin market.
So there's not a lot of money moving out of the asset.
It's not really moving out. It's
even though the price is going down.
Yeah. Yeah. So it's
what
like
we saw
if the
with
money
Wax,
moves out and the price goes down, then we're fucking like probably
when Wax dropped down to like 25 cents or whatever. At one point when it dropped way down, Max was looking at it, he's like, so many more, like there's way more money in this when it was worth like twice as much. And like, that's one of the reasons why we were bullish on Wax. We're like, there's no way it's not going back up. If you just look at the amount of people trading this stuff, like people want this token.
So here on the daily, we can start to see a little bit like in these high times, it was definitely making new lower lows here right before it started dumping off. You see that? Where it's like, okay, we took our little shit and then we're down here and we hit a lower low too. So then when the market turned around again from here, it's like, well, we did make a lower low on the on balance volume after this like crazy euphoria time. Maybe be more cautious as it like does this. And you would have been right to be more cautious, because this lower low was the first time it's making a lower low. Even over here where we closed below those middle B band lines, we weren't making lower lows than the previous lows at that point. See?
Yeah.
Whereas this low and is corresponding with a new lower low here, giving me less like comfort on the way back up. And now we're kind of flatlining, even though the market's like look, this is like almost unchanged.
And this is at the daily. This is looking.
This is now on the daily. Yeah, we were a second ago on the weekly.
And so each candle is 1 day.
Each candle is 1 day on this chart. Yeah. So
yeah. So you know, personally, I don't have a lot of technical analysis background, so like I don't know if I could recreate this, but I feel like now that we've been doing this repetition consistently, I feel like this makes more sense to me when you point it out rather than just like, yeah, Max just says stuff and he's usually right. Now it's starting to click with me. So personally, I'm learning along as we go. So I do like the idea that we kind of just do like a light kind of chart check-in every week on these things.
I've also,
this is kind of building a skill for myself.
This is a really clean bull bear flag again. You can see how we're like, we closed below the B bands. We stayed below. We couldn't break the resistance of that B band line, staying below. Then we broke the resistance, but in this weird pattern that's now closing below. And what does that fucking pattern look like? If not coming down from an uptrend, like here, breaking out above that point for a second, and then closing below again. What comes next is the downturn in traditional technical analysis terms. That doesn't mean this will actually happen. It's not a fucking like
crypto is basically brand new. This is the fucking Wild West. Like, yeah, it might do what stuff has done in the past, but this has never happened before. So every time it's like breaking new ground.
Yeah, there's a lot of correlation, but not causation.
Yeah, so you know, as usual, let's prepare for all of these eventualities and have a plan. And then if the price hits whatever it hits, we follow our plan. So, like I said,
a good way to summarize. It's a very good way to summarize.
I'm placing some buy orders around $40,000 in Bitcoin. Like,
yeah, and the reason why I'm mainly in stable right now is because my plan was to sit in stable last time when it started going down, and then it indicated that we're going back into a bull market. So I was like, I want to be able to liquidity farm crypto positions, like crypto versus crypto, not dollar coin positions. So I did that, and then when it looks like it's gonna crash again, like that was money I pulled out of stable coins. So I need it to be back in stable coins if the market's going down, because that's value I need to protect, and that wasn't money that I was trying to play around with. So like now I'm back in Tranquil, and if there's a clear indication we're back in a bull market, I'll go back into my liquidity farming positions. But like that's money I have to pay rent with if we don't make money doing other stuff. So
yeah, there's a lot of very, very wealthy people with very deep pockets who help to move these markets and build these patterns, and it's very not impossible for somebody to do something like this, to then like start a dump, get a bunch of people who panic sell, take their money, and immediately spike that shit right back up.
And that market manipulation isn't explicitly illegal because it's not regulated. So
Well, yeah,
there's positives and negatives to an unregulated market like this, but because it's not SEC really regulated, and these are global markets that are going on all the time on a bunch of different exchanges, and money flowing in and out constantly. That market manipulation is a factor you have to account for, and it's strange. And in the Wild West that it is, it's not explicitly illegal either.
Yeah,
I feel like
exactly.
that happens in the stock market too, though, if we're being honest.
Oh, it definitely happens.
Although
happens
it
in all
is
markets.
explicitly illegal in the stock market. I'm not saying it doesn't
Still let it
happen, but it is explicitly illegal, whereas in crypto it is not.
It's almost like
so a way to capitalize on something like this using some like just to really quickly summarize and go full circle on what we talked about today. You can, for example, connecting to Harmony again, using some of the liquidity that we've been providing. If you were to take the cautious approach here and pull your liquidity out of the pool and turn it into like stable coin, take those over to Tranquil Protocol that we just talked about, and then take your stable coin, deposit, let's say like you have your dollars here, you deposit them, like let's say you have $100, that gives you $80 worth of borrow power. Then you could come here and borrow Bitcoin for $80. Take the Bitcoin straight over to like Viperswap again, or DeFi Kingdoms, or wherever, trade that into USDC. Actually, if you're trading into USDC from Bitcoin, you would go to Curve, and you would use the not this pool, but there's a Curve pool that has Bitcoin as well. Here, Bitcoin and Ethereum, and look at the liquidity here is deep. We got $5 million in this pool, so you can swap between USDC and Bitcoin here. Probably get a really decent deal on that. Take the USDC that you get from selling your Bitcoin, deposit that back into this side. So now you would have $180 deposited against a loan of $80. So your collateral will at that point be, since that's what 50%, so you'd be at like 60%. So you'd have a good 40% cushion. And then you can wait for Bitcoin to drop. If we're right and Bitcoin drops, you'd buy back at like $40,000. Then use the Bitcoin to close the Bitcoin loan and keep the difference in US dollars. And that's effectively short selling, using these protocols to build the different steps of the process for that position. So you're, collateralizing.
Yeah, if you want to get real weird, build your own options on lending protocols.
So you can. That's the thing. So all of these protocols are basically Lego pieces that let you piece them together however you want. So however complicated you want to get with this stuff, you can. And that's really fun. But I think before we get much deeper than that, we should probably not. Because
it's a good stopping point. It's a good stopping point.
Yeah. Otherwise, it'll just go in one ear out the other. It's, it took me like years to get comfortable enough to do DeFi, like
big, massive dumps.
But yeah, it's another part of this is it does look like the market can dump, but it can also recover quickly. And so I do like participating in the liquidity supplier side of this market. So like it is a lot of risk.
It's called we do a little trolling.
when the market does dump, if the market does dump, if I'm supplying liquidity, then all my assets will start to sell into the more stable dollar side of that. Or my dollars will basically be used to buy a bunch of crypto. But then if they recover, I'll be buying back all those dollars at a better rate. So we'll see how it goes. But yeah, I feel like that covers a lot of fucking.
You just got tech talked.
Yeah.
You got